everybody. This is Dan Sheridan. It's Thursday, July 20th, and I'm going to do my plan for next week today instead of tomorrow because I'm going to be out tomorrow. I thought I'd do it Thursday. If you say, what's going on next week, Dan? Next week's going to be probably next to the CPI, which was last week, market mover, especially for us range-bound traders, mostly. Next week is the Fed meeting on Wednesday. That's going to be the big thing. You got some of the tech earnings will be on Thursday, but I think the big one is Wednesday. So my thinking is for a range-bound trader, is that something that could move the market? Yeah. So kind of my thinking is I'd be a little smaller through that, at least till Thursday afternoon, and see, because this could potentially move the market some. It might not, but it could. So range-bound trader want to be more careful. But the other thing is, what trades at least. So when I'm looking at trades today, I'm looking at trades I could be out of by next Tuesday. So maybe a little bit shorter duration. But as far as trades for next week, to be conservative, for range-bound trades, and I'm not including 0-day trades in this discussion. That's not my normal plan. We'll look at some 4-day trades, the majority of the trade, and some 10-day trades. The majority of the trades might be between 15 and 40 days. We do some each week, 4 to 10-day trades. But as far as next week, which would be starting Monday the 24th that week, the Fed is the big thing next Wednesday. So for a range-bound trader, it's the potential for bad weather by the ocean. So I don't want to plan a beach vacation at that time, but I definitely would. The most conservative way would be wait till Thursday afternoon, because that way you'd have the end. I think the Fed thing probably will come out Wednesday during the day. You have the end of the day Wednesday, you have some Thursday morning. So by Thursday afternoon, that would be the most conservative route to do. But again, you don't have to, a lot of things are discounted in the market, so it doesn't mean it has to move that much. But if I was putting it on Monday or Tuesday, I'd probably put something on Tuesday, maybe a little bit more duration, give yourself a little bit more room, a little more price protection as you go further out. For example, I'll just give one trade, but I think you get my gist of what I'm saying next week. For range-bound traders, that I think is important. So I might look at, as far as next week, something to put on Monday, right? Well, kind of what I'll say for today, kind of the same plan that I've been doing the last 2-3 weeks. Nothing's really changed. But since I got you here on Thursday, July 20th, what I like on Thursday, July 20th, you said to me, what would I do today? I'd probably do something like this. If I want to get out of a trade by, let's say, next Tuesday, and with the volatility's low, I'd probably do one or two of these calendars. So this would be the one that would give me the best chance of getting. Well, you know what? This would probably be the one I do. This would be an 8-day calendar. I'll just give you this one trade. This is what I would consider today. VIX is low. And if I put this on today, I'd be looking to get out of this possibly tomorrow, maybe 6-7%, but Monday or Tuesday at the latest. And so this would be the trade. 8. A second. So here we go. 45, 50, 45, 55. All right, here she is. So right now, as of 11:09 Central, today, Thursday, July 20th, we're 45.56. Market down a little bit at 18 points. VIX at 1366, the low end of the last 6 weeks. The range has been like 13 to 16 in the VIX. And over the last 5 years, this is near the low end of the range. So what I like about this, so I buy the AUG to sell the July 28. There's 5 days between the long and the short because there's July 31st is the last day in here. This is a 15-day trade. It expires on July 28th. If I'm putting it on today, July 20th, pay about $7 for this. So let me lock it in here. We'll be able to get a little cheaper. Your expiration break evens, you're going to have on this trade, about 45.05, about 50 points down. The expiration break even near 46.20 on the upside, 65 points on the upside. But then when you throw in, I'm looking to be out of this guy by 20, Tuesday at the latest. So that's 44 points. I mean, the absolute latest, 44 points and expected move. So if you look at this trade, the expected move till next Tuesday would be about 44 points, which would take, so that, what does that mean? That's like a standard deviation. There's a 68% probability between now and Tuesday will be up 45, down 45, and can, so when you look at it, that covers this area or so. So there's a 68% probability we're going to be in the profit graph, right? Smaller percentage that will go outside of that and have to do something, right? And I'd be looking to make, if I could do 7% in one day, that'd be about $50 for every one I do. I'd sell it out at $7.50. But my normal would be looking at 10%, which would be $70. I'd sell it out at $7.70. So, my normal profit target 10%, max loss 15%. I'm not going to get a lot into adjustments right now, but that's what I would be looking at today. A little lighter next week with the Fed meeting. Have a wonderful week, folks, and we'll see you later. Thanks.